Hi everyone, I thought I'd do a quick update on Bitcoin because we are at a very crucial level that I'm seeing a couple of little scary things I wanted to share with you because there is a possible top right now. And I want to show you why I'm thinking that and what areas I'm looking for so we know where to go, where to get out if things get bearish pretty quickly. So let's dive in and have a look. So on my last video, I mentioned that obviously we're at major resistance support, but all the stars are aligning at this. You got that. You got channel, you've got your larger channel. So I talked about in the last video that you've got your smaller channel meeting up to your larger channel, meeting up to this major resistance that also happens to align with your Sp500 zone as well. So if we come up to our targets here, we can see we've got the Sp500 here, but we've also got the Sp618 from here as well. So BTC Ratio. So we have a fib cluster zone here. So this zone here is quite an important zone where you would expect the bears to step in here. All right, because of all those things there. I'm going to delete all that because what I want to show you is just looking, that's a lot of the price action stuff. I want to also show you a few key indicators that are also showing weakness here, as well as some key ratios as well. All right, so from there you can see that we were trending high, low, and we have now got an equal high. So first possible chance where we could have a trend reversal. Same here, is trending up, equal high, and we had a reversal as well. So the key level, like I talked about, is this one here. It must hold above that pivot right there. Okay, while it's above there, it is still technically bullish. But if it was to ever break that zone, we would be in a lot of trouble. The first indicator I want to show you is the ATR, which is the average true range. So this is it here, the red line here, ATR. And what the ATR does is it's a trend strength indicator. And things that you look for is that once it's going up nice and high, it's a nice strong trend. And you can see here that it had a beautiful trend going up there. And then when we had this move here, you can see that this trend didn't make a high along with that. So that was a sign when that price made a new high and this indicator didn't make a new high that you had divergence, that was a weakening trend. Okay, same thing here. You can see this whole move down had a nice strong bearish trend until it got to this point. And then we've been going up in price action here. However, if you look at the ATR, the trend has not been a strong trend. In fact, it was only going up to this point here. And then from there, this whole move here has begun sideways to now down. So we're getting divergence in our average true range here, showing that this trend is a weakening trend in itself right now. All right, so again, one indicator, one signal. We do not act on one signal. We need price action to confirm these kind of things. And that would be if it breaks below this 24.8 zone, that would be price confirming that, yes, maybe this trend was coming to an end as well. That's one indicator. What else I want to show you is your volume. Okay, so unbalanced volume, you can see here from this peak here as well. You can see this whole move here. Look at the volume. It's had a lot of sell pressure and it is divergent. You have got lowering volume on this whole move. There's no strength, which is what the ATR is saying as well. Even now within this top right now, you can see that we are hitting a wall of resistance along here. Okay, we're just ranging right here from this zone here, ranging. And yeah, a little bit of sell pressure starting to come in now. If we were to break below this support along with that price action, that would be the volume confirming the breakdown as well there as well. All right, so volume is not confirming the move. Coming back to Dow theory, volume should always confirm the move. Otherwise, you'd be looking for a reversal or a weakness in trend. Now I'm going to look at the RSI to show you the strength. That is a momentum strength indicator, so we can see how the momentum is going as well. Okay, I've talked about this one before on my big long video as well, but just to recap it again, we have got hidden bearish divergence going into actually regular divergence as well. So going from this peak, which aligns with this peak, which aligns with this peak that aligns with this peak, and this peak that aligns with this peak. We're going to match these up. I want to show you how all of these work. So as you can see, that line goes from there to there. Matching that one goes from there to there. So that is divergence. You have a low, a high in price. You have an equal high in that. That is hidden bearish divergence. On top of that, from this high here as well, you've got a high, to high. So this is what's called hidden bearish as well, where you have a lower high in price, a higher high in indicator, hidden bearish divergence, indicating potential continuation of the trend. Then on top of that, what we've done is we've sold off, and then we've come up and now we're double topping. On this double top, you can see we have a double top in price action, and the RSI is making a lower high right now as well. All right, so on top of the hidden bearish indicating a continuation here, now that we've come up here, we've now getting regular bearish divergence coming off here. Again, these are indicators, signals. We need to price to confirm these things, and that is if it breaks below this green zone. So you can see why holding this zone is super, super important, because if we break it, we're breaking out of the channel, we're breaking out of a trend, we're breaking market structure. All of the prior signals like hidden bearish divergence, regular bearish divergence, double top, all these kind of things would be playing out, and we'd be looking at a sell-off at least back down to this kind of 20K zone. All right, so this zone here must hold, otherwise we're looking at, you know, from this 30K, a good 30% drop to get back down to this zone. All right, so RSI is also showing weakness in the trend as well. But let's now look at some other key charts that actually have either a correlation or an inverse correlation with Bitcoin as well, to see what they're saying as well. First one I want to look at is tether dominance. Okay, if you're not sure how tether dominance works, how it works is it actually has an inverse relationship with Bitcoin, because if you think about it, it is the dominance of how much money is in tether. And if you think about yourself as a trader, if you were to want to, you know, if you're afraid the market's about to go down, you would put your crypto or your Bitcoin into tether, which would increase the percentage of tether on the books. All right, so when this is going up, it's actually bad for crypto, because it means people are scared they're putting money into tether. When this goes down, it's the opposite. It means money is coming out of tether, being transferred from tether into Bitcoin or Ethereum or other altcoins. All right, and you can see right here, this green zone, this was a major resistance. Once this broke and we broke out of here, that actually aligned perfectly with the break of major support at 30K. Here's a post that I posted about that back when it happened, to indicate that yes, we had the correlation between, yes, Bitcoin was breaking support, tether dominance was breaking resistance. They are aligning and showing the same thing here. From that, now we've broken up out of here and we've been trending sideways right now. So while Bitcoin's been making, you know, been going up from 15K to 30K, tether dominance hasn't been making new lows. That in itself is divergence, the fact that it's not actually going down with the same fact that it's going down. On top of that, it's forming this symmetrical triangle. And if you look here, what it's actually forming here is just an A, B, C, D, E triangle. And if we were to break now up above this 8.5%, that would be extremely bearish for Bitcoin, because it means that now that is we're breaking out of this symmetrical triangle and we're looking for the next leg up. The good thing is symmetrical triangles only happen in either wave B or wave 4. This being a wave 4, which means we would only have one more leg up before an ABC. So what that would be indicating is that we have at least one more bearish move up for Bitcoin. Where that goes, Bitcoin could go to 20K, it could go make new lows, we're not sure. But if this was to break above 8.5%, that would be bearish for Bitcoin, for the crypto space, and we'd be looking for a bit more of a bear market again until early 2024, something like that. All right, so, but key zone is this zone here. It needs to break above this zone here. All right, so that is tether dominance. Again, looking at that, looking at things like the volume, etc., like that as well. Can you also see how, again, inverse relationship, the volume on Bitcoin was bearish, but then if you look at the volume on Tether, it is increasing. It is going up. So while this has been going sideways, Tether has been increasing. Buying pressure has been coming in, showing that it should break out as well. So inverse relationship, volume is showing the exact opposite story to Bitcoin. Bitcoin price is going up, volume's going down. This one where price is going sideways, but volume's going up, increasing, showing that actually it's been bought up. So yeah, again, telling different sides of the story, aren't they? Next chart I want to look at is your Bitcoin against your S&P 500 as well. Okay, so here it is here. Bitcoin, nice, strong trend, volume supporting the move. As you can see here, when we double topped, that in itself, Bitcoin made a new high, but in the Bitcoin to Sp500 ratio, it didn't. It actually made a double top to actually a little bit lower. Again, showing weakness in the trend of Bitcoin, that it wasn't outperforming the Sp500. On top of that, if you look at the volume, when that move came up, look at the very low sideways volume, similar to what we're seeing right now on Bitcoin as well. Weak volume on that move. Okay, I'm just showing you past history because we can use that data to help inform what's happening right now. Okay, where we are now, again, we've sold off, volume is supporting the sell-off, and then if we come to where we are right now, you can see this move has been happening again on weak to sideways volume. And even where we are now, we've double topped here. This move from there to there, you had a double top, so that's volume double top, price action high, and now from here, double top, volume has made a lower high, indicating selling off as well. All right, so divergence from there to there, divergence from there to there, volume is showing the story that actually Bitcoin will underperform against the Sp500. Bitcoin is not in a bull market when it's underperforming against the Sp500. Again, the key zone it must hold above is this zone here as well. That's the pivot low. If we break below there, we're looking at a sell-off at least back down to this kind of zone down here, bare minimum, probably lower. All right, but again, indicating that this was just a corrective rally, not the beginning of a bull market like most people are indicating. Again, another chart showing the same thing. Let's now look at the Bitcoin against the Russell 2000, because whenever crypto is in a bull market, it should outperform the Russell 2000, which are the high growth stocks within the American market. Okay, Bitcoin against the Russell 2000, same thing, double topped, lowering volume, showing that it was a fake move. When it came down, selling pressure was aligning with the move, and then here, this move here, lowering volume coming up, and then as you can see where we are right now, we have massive divergence in the volume compared to the double top. We have a double top in price action, we have massive divergence, lowering volume on here. It's already making new lows before we get down, indicating that Bitcoin is about to underperform against the Russell 2000. It should outperform these shit stocks on the Russell 2000. Again, it must hold below there. That is a sign where price action actually confirms these signals and that, yes, we're going to make new lows again from here. All right, but again, indicating massive weakness, and you can see the massive sell pressure coming in against these kind of things. As I've been saying for a long time, this whole what's happening in Bitcoin right now is it's correcting its whole existence. It's not correcting just the halving like it has in every other bear market. The other bear markets you guys have been through, they haven't been bear markets, they've been corrections. They've been corrections in the stock market. What we're going through right now is actually a bear market. It's the first time we're going to have an ABC of its whole existence. What you've now seen is the A, we've come up for the B wave, and we're going to be going down for the C wave. We are correcting its whole existence, in my opinion. Chart I want to show you is the VIX to Bitcoin chart, and what this shows you is the VIX against Bitcoin. And again, if Bitcoin were to sell off, often a lot of fear will come to the market and the VIX will start to pump and outperform Bitcoin. When we're in a bull market, there's lots of greed, the VIX is not performing very well and Bitcoin will fully outperform it. Okay, so this is VIX against Bitcoin. So when this is going up, it's showing that fear is stepping in. You can see here, this was the COVID drop. VIX was outperforming Bitcoin. And then from this point, it started going the other way. Bitcoin was outperforming the VIX. This was our bull market. This was the bottom. This is when Bitcoin was 3K. Coming down, down, bull market. And then bull market, we had the first top in April 2021, which is when Bitcoin hit 64K. Then we sold off to that 30K. And then we went back up to 69K. Come here. Okay. We topped out. The market topped there, which again was a signal to help align with the top. Then the VIX outperformed. We're in a bear market. And then you can see here what we did was we had a little double top, broken, changed market structure. This was where the bear market ended, and we've been in a bull market since. This has been going down. What I'm looking for is if we get above this zone here, because that was major support, which is now acting as resistance, potential double bottom here. If we get above there, that'll break the neckline, get back above that zone, and this would start to go back in an uptrend. VIX outperform Bitcoin, back in a bear market. So that is one of the key things I'm looking for as well, to show that VIX might start stepping in and outperforming Bitcoin, to see that we might head back up that way. Okay, next chart I want to show you is the Nasdaq against the Sp500, and what this is showing you is risk on to risk off, because this is Nasdaq outperforming the Sp500. And if you look left at where we are, last time we were up at this range, that there is the top of the tech bubble, when technology was extremely overvalued, and people look back at that going, how could people not see that? Well, we're in the exact same level again right now, and some people still can't see that. Okay, and again, this is a ratio. It won't go up forever. What this is showing is that Nasdaq is outperforming Sp500, and that the majority of money is in Nasdaq right now over the Sp500. So technology is far outperforming things like banks and consumer staples, etc., like that. Right? This ratio can't go on forever. Last time we were up at this level, tech was at extreme evaluations. We are there again right now. We had a double top. We've come down, we've bottomed, we've come back to the trend channel here. And now we've come back up, but we've come back up to this major resistance where we were, where we first sold off when that bear market began as well. On top of that, if you look at where we are right now, there's a couple of things to take notice of. One, we're up in the very overbought level now, where we could potentially sell off soon on the weekly candles, is not daily. MACD, again, is coming up to a range showing potential divergence. If it were to flip over here, it is showing divergence on the histogram right here. You can see here, divergence here. So this move to this move is showing divergence, weakening trend as well. Let's dive down into the daily, see what we can find there as well. So on the daily, again, we're coming up to resistance, but that doesn't mean anything yet. We need, again, we don't just sell because something's at a resistance. We need confirmation. As you can see, clear uptrend, higher high, higher low, higher high, higher low, higher high, higher low, higher high. If we were to break below this point right here, then we are breaking below our up, and we would be changing our market structure. Okay, there are quite a few gaps here to fill as well, which again, they'll probably get filled. But yeah, things to watch out for, that we are at a level where, again, Nasdaq might start to underperform Sp500, showing risk off might start to come in, which would not be a good sign for Bitcoin as well. The next thing I want to show you is the global net liquidity as well. And as you can see, global net liquidity, again, crypto, things like that, they thrive off liquidity. They need liquidity in the market to pump it up. Okay, you got to think of it like a bucket of water. There's only so much water in that bucket that can flow out into the stocks, the crypto, the bonds, etc. If water's coming out of that bucket, that means that water's got to then start coming out of the stocks, the crypto, stuff like that as well. All right, so as you can see here, liquidity was going nice and strong, nice and strong, nice and strong. It then topped out, rolled over, and then we had some liquidity come back in with the banking crisis, China, etc. come out. But then from this point, you can see again from here, from all these points I've been showing divergence from, the liquidity has been drying up and actually diverging lower low, lower high, lower low, going down as this price has been going up. Okay, so the liquidity in the market, the global liquidity has been actually going lower while the price has been going higher as well. This is the same on the Sp500 as well. So the liquidity, either two things need to happen. Either liquidity needs to come up to match that price action, or that price action needs to come down and match that liquidity. All right, what's more, the latter is probably the one that's going to happen, as a lot of those other indicators and a lot of those other ratio charts are showing that same thing that we might be about to topple over here as well. Last thing I want to show you is also the timing cycle of where we're at with Bitcoin as well. And as you can see here, when we topped out on December, whatever it was, December 18, 2017, we bottomed exactly 1 year later. You can see December 17, 2018. So for exactly 1 year, we had that bear market. Then after that bear market, we then rallied from that December up until that kind of July range. Okay. Here, same thing, you can see we topped out here 8th of November, and then we bottomed around same thing 7th, 8th of November, 1 year later, 1 year bear market before we've done this. So, and again, where we are now, up around that June, July, same time frame as our rally here. So even the bull case, going off what we did history, everyone's talking about that, is that, you know, this is where we are now, that's matching here, and then we actually then sell off now until kind of March next year. So even the bulls would have to go along with the fact that we should be at least getting a pullback, which would align with everything that we're seeing as well, that you would at least get a bare minimum pullback down to this kind of 20k zone. There's a massive CME gap down here at 20k. Fill that gap and then see if potential bottom. Good thing about that is that it's a really good risk to reward from there, because if you can come down, show the Bitcoin futures. So here's your Bitcoin futures chart. You can see we've got a massive gap right here. So if you come down and you look to buy around this Bitcoin futures gap, that is where we started to diverge from. And then from there, you can have a really good risk reward, because that was a major swing low from there. So it should hold that as support. If it doesn't, then we're looking to come down to here, 18.5. If we break that, then Bitcoin's in a lot of trouble, and I'll be looking for new lows after that. But while we remain out here around this zone here, I could look to go long around here for a really good risk to reward, because that way you can have a nice tight stop. And if you're wrong, we go much lower into a bear market from there. So that's what I'm looking at with cycle wise and timing wise in that department there. So yeah, that's just a few key things I wanted to show you guys, just to show you that we are at a very extremely important level, and just to make sure that, yeah, you're alert that we are at that kind of level. Would be quite silly to buy right now. If you were wanting to buy Bitcoin, what you'd be looking for would be this major support, which is now resistance, to flip back to support. Okay, so if we were to break up through this 30k, then test it as support, then yes, if we break up from there and those sellers become buyers, then we have a chance to potentially go higher from there. But there are a lot of signals and a lot of things showing that this could be a major top right now. If you want some more detail on that, go through my big long Bitcoin video. I've talked about it for an hour. I'll put it up here. Link will be in the description as well. It will go massively in depth why I think, and I actually predicted that we would come up to here and redistribute back up here, which it looks like it might be doing right now. And if you want some details around that, look at 35 to 41 minutes on this video, and it goes into detail around the Wyckoff logic around that. All right, guys, so yeah, just be careful. That key level is obviously holding below there. Yeah, we must hold that. So if you like the video, make sure you like and subscribe, and I will see you at the next video. Take care, everyone.